Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1186th edition of Short-Term Trading Live with Oscar Carboni, and of course, that would be me. Good evening, traders. This 1186th installment of these educational videos is coming to you on a Sunday night for trading Sunday through Monday, maybe into Tuesday. That would be June 9th, 2014. Before we get into the host of things on the board, let me remind you that futures trading can be extremely risky, can cause substantial financial loss. It's certainly not suitable for all traders. And if you don't recognize to put your stops in, put them in first, and a stop is your best friend in this business, you need to leave. Get up, don't watch the video, run and close your trading account. Because anybody who doesn't put in stops becomes a statistic in this business, a past statistic. Put your stops in. All right, so traders, what do we have on the board? E-mini, S&P, NASDAQ, DAX, Dow, tranny, you name it. Green Omni, clap for that, please. We love those green Omnis. Strong, strong, strong once again. Last week I gave you very strong videos. The market should move up higher. I showed you weekly charts. I showed you daily charts. And I said, boom, we're going. So far, so good. Moving forward this week, U.S. indices looking very strong. The daily and the weekly charts alike. And then there's T-bonds, traders. T-bonds, T-notes. These two markets look a little lofty to me. Just a little lofty. I'm not saying the top is in. Well, we did kind of say that a few months ago, and that was absolutely wrong, right? Let me step back. We did say that when the market was a lot higher, and it hasn't gotten back to that level yet, but it certainly hasn't been in a bear market lately. It hasn't gone higher than when we called top in the beginning, but it's certainly, at this point, hasn't been going down, right? So calling for the downside a few months ago has been absolutely wrong, but now we're in a little bit different situation, and I think you'll like it. It involves a couple of my crafty little tools that I use to gauge markets, the 200-bar moving average, T-bonds, T-notes, we'll look at that. Traders, you should come on down to livewithoscar.com. Come into my free trading room. Don't trade alone. It's very difficult sitting by yourself, trying to figure out with all the information flying through the internet, what's real, what's not, what should I buy, what should I sell. Very difficult task to handle on your own. If you come down to livewithoscar.com, come to my free trading room. I am there at the helm, on camera, on microphone. I am there to help you understand the charts, understand the markets. I'm doing this for over 32 years. I've got a little bit of knowledge here. Come on down and join me. It's free. All right, so I'm going to show you some charts, and in those charts you will see how the daily and weekly in the indices are looking strong, including the DAX. You'll see how T-bonds do not look as strong, and that the charts I'm going to show you show me that we are still on target for our yearly projection of 2130 to 2150 in the S&P. Now remember, this target was presented to you many, many moons ago when the year started. We actually got down to the 1700s, right? So far, not anymore. 1950 we're at now, 1946. Bravo, bravo, right? We've gone up 200 points since I've given this out. Why not go the rest of the way? We'll see what happens. All right, traders, so like I said, come on down to my site. Come join me in my free trading room. And if you like these educational videos, I put one out almost every night, but some nights the video is good for the next day, so it's like a 2-day video. So subscribe to these videos on YouTube. This way you'll get an email every time I produce a new one. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart in this series will be the E-mini S&P daily bar chart. We are still looking at June. June is most active right now. We will change this week to September at some point. I will let you know. It'll come on Thursday. For now, June is most active, so let's concentrate on June. This is a wonderful channel that we've been in for a long, long time. This channel goes way far back, and we would do things like hit the bottom and hit the top and hit the bottom and hit the top and then get through the bottom a little and then hit the bottom and then it makes its way to the top. But look what it has done. Bravo for the market. It broke out above and it's all the way up here. That is a breakout, so you got to love what you're seeing there. And then look at this beauty. Here's the weekly. A chart I showed you last week in my videos before we got above the green line, or maybe when this one was just starting and I said this has to go. We're all the way up to here now on the weekly. This channel you're looking at goes back almost 2 years, connecting low to low to low to low, connecting the highs. So we should end up here somewhere, because now we've bounced off of this. We've gotten above previous highs. That's what this is right here. So on the weekly, we're above previous highs. We're up here. That's very, very strong, traders. So S&P looking great. Then there's the NASDAQ first, the daily. Remember Oscar's infamous F flags? Well, look at that, huh? Bravo for the F flag. A clean, clean breakout. You can clearly see where we went, broke out, and then had another nice move up. The weekly, traders, I put this in front of you last week in my video, and I said a breakout is coming. NASDAQ has to be next, and this is exactly what it looked like. That's what it was. This is what it turned out to be. Another round of applause. Look at this. My goodness, very, very nice. Look at that breakout. So now we're above, finally, NASDAQ does its run, and it's above its previous highs. Then we can look at the DAX, traders. The DAX above its previous highs on a weekly bar, a huge, really long channel. We are going to go up to the top of it now that we've gotten finally above this. And when you think about it, as a market moves, right? You see a market hit something like this and come off and then try again and come off and try again and come off and try again. And finally, when it gets above, it's got steam. So that looks pretty good. So now we look at the Dow Jones Transportation Average. No sense in showing you the dailies. They're as strong as can be. Look at the weekly. This is a wonderful breakout that used to be the previous highs week after week. It is just making higher highs after higher highs. And the Dow Jones Industrial Average just finally last week, as of Friday, settles much higher, gets above previous highs. It has joined the party. You gotta love that. And then there is the bonds, traders. Take a look at this chart. I have shown this very same chart to you since we started calling top up here. And I said I don't know when it's coming. I cannot say that it's going to happen right away, but I know it's got to happen. And here's why. Because we don't spend a lot of time below the 200-bar moving average on a weekly chart. It just doesn't work out that it stays below unless it's a bear market. In a bull market like this one, it stays above the 200-bar moving average. Well, after we had our massive run up and it looked like the top has been called, and I've got my little topping tool on here, you will note that we get below, which doesn't usually happen, the 200-bar moving average, and it just keeps moving sideways. 43 weeks below the average, 2 weeks above it. They weren't even together. It was 1 week back here and then this week here. So now we're below it. We are below the average. It could not stand up there. So for 45 weeks, you've got 43 and 2. What do you think that means? That market has to finally start to give. Plus, we are right up against one of my rings here, and at the 200-bar moving average where it has failed. I think if you ask me, that's a good sign that bonds might need to come off just a little bit. Traders, pull your own charts, do your own homework. Remember that the Fed is involved in bonds, so bonds are more difficult to trade than other markets, but a chart is a chart, and I don't think this chart is lying. Pull your own charts, do your own homework. I'll see you at livewithoscar.com. So, traders, you've seen the charts, you've seen my technical argument for why we've got the green Omni. You can see in the charts that they look very strong. Now, we know this. Not every market, not every chart is going to just keep going straight up. Have your stops in, but according to what we're seeing, we've got a little more time on the upside. The T-bonds and the T-notes. I didn't show you a T-note chart. I will do that if you come to livewithoscar.com. I actually think the T-notes have a better sell signal than the T-bonds. So come to livewithoscar.com if you want to speak about T-notes, T-bonds, and if you're a stock trader, if you like stocks like Tesla, BIIB, if you're into stocks like that, if you'll trade Amazon, Omni puts out trades. They're good for 1 to 2 days, sometimes 3, but they're very short term as far as stock trading. We do not scalp. We do not jump in and out during the day, but we do get in somewhere and we get out when the profit objective is hit. We try not to stay in for too many days in a row. These are stock recommendations from Omni. Come on down to livewithoscar.com and I will give those recommendations out to you. Traders, I'll see you at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay. And if you say this to yourselves over and over again, it might actually sink in. And you know what that is. Stops are in. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.